We're on the pound dollar on the 5 range, and what I've done here is I've loaded 3 months worth of data, and I've just gone through and worked out some advanced patterns, some back patterns and some Gartlys. And the way that I've done it is simply going for one target and stop loss further back than the conventional way for these targets. And the reason why I'm doing this video is just simply to show people maybe an alternate way of working these patterns. Maybe it's more profitable for you. I know when I did my testing, and I did over 2,000 of these patterns in my spreadsheet, and I worked out the best way to work them. One of the things that I looked at was on the 5 range, and I picked up what I believe is some useful information, and that really is to do with how the pattern forms and the actual X to A leg, this move here. And it really all comes down to the X leg itself, whether or not we have a clear V point like this, or whether or not we have a double bottom as we do on this one. So you can see here a double bottom. And if we apply that rule to the 5 range, and it allows us to pick higher quality trades that have a higher win rate, and they actually have, for me anyway, a higher win rate for hitting secondary targets. So in this video I'm going to talk through how we pick the X leg, how we get our entry, and how we then just play for one target, and we actually have our stop a little bit further back. We're going to look at 24 trades that have already been drawn out. 15 of them won, 9 of them lost. Over a 3-month period, that was a 313 pip win. The average loss is for around 14 pips, so we're really dealing with the lower time frame here. And one thing we've got to account for is that we can get stopped out very, very quickly with our stop loss, and this is why we have our stop further back. So we're only looking at bats and Gartlys. This first trade that we have here, key thing that we're looking for is a V point like this. This is a V point, but in this scenario we have a double bottom. So we're looking for decent levels of structure, and that V point or that double bottom is the decent level. So we put our fib on. We can see we hit a 61.8. What we then do is, this is not a deep Gartley, so we simply enter at the 886. Right here we have our order, and then we have our stop loss below the 113. Now this is a small trade, so we have it between the 113 and the 127. Typically that's where your stop loss is going to go in every situation, because these trades are very small, so the risk on this trade is just 11 pips. So you can see you would have been filled here at the 886. Your stop is at the 113.5, and we then simply wait for that 61.8 to be hit. Minus 2 pips of front running, that leaves you a winner of 15 pips. We look at this next trade. We have a double top that's occurred. So this is a decent level for an X leg. It's a fairly deep Gartley pattern, and that means then that our entry will be just above the 886, stop between the 113 and the 127, and we were stopped out there for 10 pips. Let's move across again. I do already have these drawn out because the video would just be too long. I've simply just taken those trades that have a clear X leg. Okay, sorry about that. Right, okay, so here we are again. Very directional move here, but we also have another retest. So double bottom for me, and if we throw a fib on, this is a back pattern. We have our orders at the 886, and you can see at that point we turned. So from the 886 to that 61.8 minus 2 pips, that meant 38 pips were banked on that particular trade. This back pattern, we enter in at the 886, stops at 113.5, and we were stopped out there for 18. There are a few trades that completed dead on the 886 where I would not have been filled. They have not been included. Okay, so in this situation, 886 again for this back pattern, holding for that 61.8 minus 2 pips. That's a 35 pip winner. Let's move across. For me, this was valid as a retest. This was a Gartlys pattern, so 886 up to the 113.5. You can see there we were not stopped out, and we did actually come down to hit those targets. So from the 886 to the 61.8 minus 2 pips, that was a 20 pip winner. This here is a clear V point. You can see the market rallied straight up and rallied straight down again. These are key levels of structure. Whenever you see this, these trades are higher probability because this is a clear structure level that's formed. We just rejected straight off it. So these are the types of trades with double tops that we're looking for. And from the 886, you can see there we would have been filled. And down to the 61.8 minus 2 pips is a 24 pip winner. Let's keep going across. Again, this was done over 90 days. Now, you wouldn't have been in all these trades because some of them would have happened during news, some of them would have happened during when you was away from the computer or when it was night time. Here, X-leg again, clear V point, entering at the 886. Stops 113.5. That was a loser for 19 pips. Okay, once again, clear V point. Plus we also have a little double bottom. Entering at the 886 there, and we're looking for that 61.8. Minus 2 pips, that's a 31 pip winner. So it's the same thing. We're really looking at the X leg, that double bottom or that double top, and that clear V point. That's what really makes the trade. Okay, zoom in a little bit on this one. So here you can see clear V point here, entering at the 886, stops at 113.5. This time we actually fell short by a few pips. Now I actually had this one down as a break even because when you front run, we would have come a couple of pips here from target, so that would have been a break even. Okay, so Gartlys pattern here, once again, clear V point. We would have entered in at the 886 here, stops were not hit, and we just came down and hit targets. So minus 2 pips for front running, that's 27 pips banked. Okay, so a few trades here. Let's clear this up a little bit. So this back pattern here lost, but you can see, once again, clear V point. And we entered in at the 886 to the 113.5, just stopped out before it turned, so that was a loss of 13 pips. On this one, once again, clear V point. This is a back pattern, this one. So entering at the 886 and look for that 61.8 minus 2 pips for front running is 24 pips of profit. And this really only works on the 5 range because you're picking the higher quality trades, and just because of the way the 5 range moves, for me, that's why we have the higher probability of hitting that 61.8. So once again, clear retracement here, clear X leg, that V point that we're looking for. We enter in at the 886. Now in this situation, we rallied down, did not hit the 61.8 and then came back up. We would have been filled on the return up here. Stops were again between the 113 and 127, and as you can see we did rally down here to hit that target. Minus 2 pips for front running, that's another 24 pips. Okay, very big trade here. Clear V point, this is exactly what we're looking for. Entering at the 886, stops at the 113.5, which is down here. You can see we were not stopped out. That 61.8 minus a couple of pips was a 59 pip winner. Quite a small trade here, but once again you can see back pattern with a clear V point X leg, entering at the 886 we were just filled. We hit the 61.8, minus 2 pips of front running, that is 20 pips of profit. This for me did not work when we look at the normal candlestick formation, say the 15 or the 60. And really when doing this you really want your risk to be quite small and you need quite a big stop loss. So that's why it works quite well here on the 5 range. So here we go, clear V point here, clear X leg, hit the 50% for a back pattern. We got filled on the 886. We hit the 61.8, minus 2 pips for front running is 39 pips of reward on that trade. We have a Gartlys pattern here. So this was valid for me, but it isn't the clearest V point. You can see we've got a couple of legs here and here, but for me I included it, so I will include it in these figures. That was stopped out for 17 pips. Okay, here in this situation, we do have a clear leg here, but we do have a couple of other legs as well. So this again comes down to your judgment. This could be one where you've decided not to take it because it isn't just that clear V point. I did already draw it out, so I will include it in the figures. This one went on to win 61.8, so that's a 35 pip winner. And again, you can use your own judgment to how well you want the X leg to be, but without a doubt these are the best here, these X legs. This one actually lost for 14 pips. And then we have this next one, which is a back pattern just here. You can see clear leg here, clear X leg. I got filled at the 886 here and hit that 61.8, so a winner for 35 pips. This is a Gartlys pattern. This leg here, we do have a leg just before it, so for me again this is still valid, but if you just want that clear X leg then that wouldn't be valid for you. This one actually lost, so that lost for 19, but we've had a couple of situations now where I've shown you patterns like this where we have a leg before it and those trades have lost, so you could easily have not included a couple of those losses, but I did, because when I was working it out I took the trade before I actually saw the outcome, so I got to keep it truthful. Here we go, clear X leg here, that V point that you're looking for, entering at the 886. Targets hits there for 56 minus a couple for front running. Exactly the same here. Clear X leg, this is a back pattern. On this one, yes, we were just stopped out here. So you're stopped out there for around 12 pips. And I think we must be coming to the end. So there we go. So total there of 15 winners, 9 losses. Total bounce 313 pips. There were a couple of questionable trades in there which lost, 2 of them certainly for, I don't know, maybe 35 pips ish, something like that. But this only works on the 5 range, and I thought this video may be quite useful for particularly new traders that are just learning these advanced patterns. There are other ways to work these advanced patterns where you take one target at the 38.2 fib, second target at the 61.8. The only problem with that is when we're actually working the lower time frame. Let me see if I can find an example. Okay, if we use this example just here, move this fib over, so you would have entered here at the 61.8, so I'm just going to put a structure level on where you entered. The market came up and hit this 38.2. Typically you would then roll to break even and a couple of pips past it, which would put you here. And then what happened is the market instantly came down and the spread would have taken you out for your second position. And that happens quite a lot unless you just have a very directional move that goes on to hit first and second targets. And so particularly on the lower time frame, this situation of taking one target, moving 2 pips past break even doesn't work. You're better off simply hold, or at least what I found is you're better off holding and waiting for that 61.8. Is there another scenario here where that happened? Yeah, here's another one right here. So your fib would have been there. You would have hit your 38.2. You would have moved to break even, which would have been here, and obviously it came back, stopped you out, and you missed out on all of that profit. So again, only works on the lower time frame, but over that 3-month period, that was 360 pips of profit, which is around 120 pips a month just by working the 5 range that way. And again, you can be as definitive with those rules if you like, and there was a couple of extra trades in there, which a couple of extra losses that you may not have wanted to have taken.